Hello traders, in this video we are going to be looking at the 3 EMA crossover strategy. We're going to be looking at 3 different exponential moving averages and a strategy that involves the crossing over of these moving averages to get trading signals. We're going to be looking at the step-by-step process on how to use this strategy for day trading, and the EMAs we are going to be considering are the 9, 20 and 50 periods EMAs. This strategy helps you to spot trend reversals, identify strong momentum, and avoid false signals, no matter the markets that you're trading. Okay, so for a start, we are going to be setting up the chart. We are going to be using the MT4 trading terminal for this video, and then we're going to be adding up the EMAs to the chart one after the other. So first of all, we're going to add up the 9 EMA, the period set to 9, MA method, exponential. You can leave it apply to close. You can select the thickness of the line that you want, and then the color, you add it up. And then the next EMA we are going to be adding is the 20 EMA. I'm just going to change the color for easy identification. Okay, here we go. And then the next EMA we're going to be adding is the 50 EMA, right? And I'm just going to give it another color as well. Okay, so now for the 9 EMA, it is the fast moving average and reacts quickly to price changes. Okay, it is a fast moving average that reacts quickly to price changes, making it useful for short-term trends. Okay, so the 9 EMA is basically for short-term trends, right? Then the 20 EMA is the medium, which is the medium-term moving average. Yeah, it balances between short-term signals and overall trend direction. Then the final EMA, which is the 50 EMA, is the slow moving average, and it helps us identify the general trend. Okay, so for the purpose of clarity, we had to set the EMAs to different colors. Okay, now the second thing to understand is the crossovers. Now for a bullish crossover, when the 9 EMA crosses above the 20 EMA, that happened around here. When the 9 EMA crosses above the 20 EMA and both are above the 50 EMA. So the initial crossover happened here, but then the short term and medium term moving average crossed above the long term moving average around here. So this would have been where we would have entered a buy trade, not here. Okay, so the crossover strategy involves the 3 moving averages. We don't just enter a trade based on the crossover of 2 moving averages. It has to be the 3 moving averages, okay, before entering the trade. So when we have the 9 EMA and the 20 EMA cross above the 50 EMA, it signals a potential uptrend. This means that the market is gaining upward momentum and we should be looking for buying opportunities. Okay, then on the other hand, when we have the 9 EMA cross below the 20 EMA and both are below the 50 EMA, as in this case, it signals a potential downtrend. This means the market is losing momentum and you should consider selling. Okay, so this would have been a good opportunity to sell as the EMAs give us bearish signal. So now the third step is to identify the trade entries, right? So when the 9 EMA crosses above the 20 EMA and both are above the 50 EMA, try to wait for the price to pull back slightly and then look for a bullish candlestick pattern. So when the crossover happens, do not just jump into the trade immediately. Try to wait for a little bit of a pullback, like what happened here. We can see that there was a pullback here as price kind of retested the 9 EMA, and then the next candlestick was a bullish candlestick. So after this bullish candlestick form, we would have considered entering a buy trade right about this point. Okay, and then the stop loss can be set below the previous swing low, and then we can use resistance levels to exit, or we can decide to exit after we have a bearish crossover. Okay, and then now for the bearish entry, it's just the opposite. when we have the 9 EMA cross below the 20 EMA and both of them cross below the 50 EMA, just wait for a little bit of a pullback, and right after you have a bearish candlestick form, then you can enter a sell around here, and then stop loss can be right above the previous swing. But in this case now, we can set our stop loss above here because we had even two candlesticks that moved sideways for a bit, and then our take profit could be at the nearest support level, or we can consider waiting for a bullish crossover to happen before exiting our sell. Okay, so now you can also consider trailing your stop losses. Yeah, when you are in a buy trade or in a sell trade and price is moving in your direction, you can consider trailing your stop loss as price continues to move in your direction. Now, in terms of filtering false signals, because false signals tend to happen, so in order to avoid market noise and false breakouts, you might want to use the 50 EMA as a trend filter. The 50 EMA is this EMA, this particular one. So you might want to only take buy trades when the price is above the 50 EMA. Okay, when the price is above the 50 EMA, just like our signals indicate, the price has to be above the 50 EMA, and then for sell trades, the price has to be below the 50 EMA. Okay, this helps you ensure that you are trading in the direction of the broader trend. Okay, and then it's good that you combine with price action. Look for confirming price action signals like breakouts, consolidation patterns, or candlestick formations, just to strengthen your entries. Okay, so basically this 3 EMA crossover strategy works well across different markets, including stocks, forex, futures, cryptocurrencies, and all of that. And you can also use it across different time frames, okay, helping you stay on the right side of the trend while filtering out false signals. So I hope you found this video insightful. Kindly like and subscribe for more trading insights. Cheers and happy trading.